President Donald Trump signed an executive order to create a sovereign wealth fund. While the media speculates whether the US government will invest in crypto, let's take a broader look at the past and the potential future of Bitcoin. Hello everyone, I'm Dr. Alexey Konoshevich and welcome to Blockchain State. 2 years ago, I predicted that Bitcoin might eventually crash. At the time, long-term trends supported that view. As we've seen, the trends have shifted. Despite this, I still believe that Bitcoin lacks a sustainable long-term strategy. Over the years, its price has mainly grown not because of its practical applications, but due to an ever-expanding investor base using it solely as a speculative asset. Investors simply buy, hold, and sell. Speculation isn't inherently negative, especially when it's based on expectation of growing utility. But when value increases solely due to speculation, it can only lead us down a dead end. So to really get what's going on with these trends, let's first look at what has affected Bitcoin's price over time. Then I will give you my take on what can make Bitcoin sustainable and therefore keep its value high in the long run. Over 17 years, Bitcoin's price has soared from practically nothing to a historic high of $110,000, though its journey has been anything but linear. In 2010, you needed 5,000 bitcoins just to buy a pizza. Then, in 2011, the infamous Silk Road marketplace contributed to an early price spike. When American authorities shut it down, Bitcoin's price unexpectedly leaped from a few $100s to over $1,200 per coin, following the US Senate public hearing. Then came the first altcoin season, with Ethereum's debut in 2016 and the following ICO boom, initial coin offering, if someone forgot, culminating in 2017. Bitcoin surged to an all-time high of 20,000. After the first crypto winter in 2017-2018, Bitcoin gradually rebounded. The explosion of decentralized finance, DeFi, and the rise of non-fungible tokens, NFTs, further energized the market, even though Ethereum's smart contracts led much of that innovation. Bitcoin, however, remained the primary gateway for crypto investments, especially with its wrapped version appearing on decentralized exchanges and automated money makers from 2018 to 2020. After a modest rollback, COVID-19 struck and governments all over the world poured out a rain of freshly printed money to their citizens, fueling another wave of investor interest. Just as it appeared trends were slowing, institutional investors entered the scene. Traditional financial institutions began embracing Bitcoin, launching exchange-traded funds, ETFs, around 2022, which peaked in popularity between 2024 and nowadays 2025. This broadened access for both retail and institutional investors and reinforced Bitcoin's status as digital gold. Now, with rumors that the US government might soon hold direct crypto investments through a newly initiated sovereign wealth fund, it's worth considering what would happen if this becomes a reality. Undoubtedly, the United States would set a global precedent for other countries. This trend could shape the next 2 to 5 years and potentially send Bitcoin's price skyrocketing, perhaps fulfilling the wildest dreams by reaching 1 million per coin. There is a catch, though. Even though the most powerful financial organizations can suffer from short-sightedness, Bitcoin never fully became the electronic cash envisioned by Satoshi Nakamoto's white paper. Its Silk Road era may have been its golden age for real-world transactions. For clarity, it remains the go-to option for shady trades worldwide. In legitimate markets, however, Bitcoin functions as a store of value. In fact, a speculative asset traded by investors with little regard for its original utility or any other utility at all. And we now stand on the threshold of potentially the biggest one yet: national investments. Many governments already own some bitcoins, often seized from criminal enterprises. And I think if treasury departments jump in late, they might miss significant profits, while early movers could enjoy a larger windfall. Each trend so far has expanded Bitcoin's investor base, but what could surpass the participation of institutional organizations, superannuation funds yet to embark though, and national treasuries? Eventually, you run out of buyers on Earth. There is certainly no one on the moon to continue the trend once Bitcoin gets there. That's why I consider it short-sighted to expect that Bitcoin's speculative value will continue to be fueled by these trends indefinitely. Those who could shape Bitcoin's future and make its use truly sustainable beyond mere speculation, unfortunately show few signs of having a long-term vision. My prediction is that they will quietly exit before the trend turns downward. Many question Bitcoin's reliability, but such skepticism often relies on flawed assumptions. Bitcoin is neither centralized nor vulnerable. It has operated as a publicly accessible ledger for 17 years without major disruptions. An unparalleled feat. If national treasuries recognize Bitcoin's resilience, it could pave the way for long overlooked applications. Bitcoin has the potential to evolve into a robust application platform. Yes, you heard me right, an application platform similar to Ethereum. While some people debate this, I believe their skepticism stems from a lack of in-depth expertise in this area. Imagine leveraging Bitcoin's blockchain for National Land Registry, a decentralized alternative ICANN's TLD system, or even a voting system for democratic countries. Bitcoin's higher fees could be justified by unprecedented security, particularly for mission-critical public systems that handle valuable assets. While cheaper, less secure blockchains may appeal to speculative or experimental projects, Bitcoin is designed for scenarios where reliability trumps cost. Before wrapping up, I'd like to thank you for your interest in this video. You can support my channel by simply hitting the like button and subscribing. Your support, however, will be even greater if you share your thoughts in at least 7 words in the comments below. This will help signal to YouTube's algorithms that the video is worth recommending to others. And by the way, you can read this video as an article on crypto.news, where I often publish my opinion articles. Find the link in the description. I have long advocated for building dApps and smart contracts on Bitcoin, and I'm deeply involved in the technical side. You can watch some of my previous videos on that topic. High fees are a worthwhile trade-off for top-notch security. It's for big boy sectors where reliability is non-negotiable. If national treasuries finally embrace Bitcoin as the ultimate digital store of value, it will open the door to its true utility as the digital fortress for the most critical pieces of public infrastructure. Its price will never turn back, literally reaching the moon and even Mars. Bye, and see you in the next one.